Welcome back. We are here looking at the cryptocurrency market. It's going to be my daily forecast for Monday, July 19, 2021. If you like to support the channel, you will hit the subscribe button down here in the corner. Hit the like button and bell button to see our new videos, and you're welcome to join us over at Patreon. The link is down below. So this will be a more watered down version of my usual videos, and the main reason for that I think is because the cryptocurrency market is kind of dependent on what happens with Bitcoin, and probably also with what happens with Ethereum. So I have decided now just to focus on those two cryptocurrency, and I look at them in more detail as I look at more chart or in different time frames for those cryptocurrencies. So the 4-hour, probably 1 hour, and the weekly as well, as these will basically determine where the other cryptocurrency will go. If Bitcoin falls off a cliff, then the same will happen to Ethereum and other cryptocurrency. And if Ethereum falls off a cliff, then it probably will have a similar effect. So we'll start by looking at the Bitcoin in the daily chart, and as you can see here, we do have a crossing of the daily chart here in the MACD, which basically is a bearish indication. Stochastic is bearish, and so is the RSI. Well, there's still a room to the downside. So what is going on here is basically that we are in a descending triangle. We can see it right here. So right there. So, and I'll take the other part in a moment. So we did have a rally here where we basically had a false breakout up towards the 200 moving average, and then just a kabang to the downside. And every single time we getting close to this line, we have broken down. It was just this, which was a false breakout, broke down really here, down, down, down. And then we have the bottom. And the bottom is around 30K or down to 28K. And we need to basically focus on this and this area here. So in the past, this was also major support. So this was back in roughly in January. We fell towards this level here and bounced several times. We have seen the same thing happening here, but at the current stage, it looks like it's only a matter of time before we get into this corner, and then we basically break significantly lower. How far? Around $10,000 is the estimate. So the high of this fall is roughly 40K down to 30K. So $10,000 is a measurement here, and that basically means that we'll drop $10,000, and that will drop us down towards the 20K. And that should make sense because 20K was also where we had the previous all-time highs. We have to go all the way back here. Then 20K is right there, roughly around this area here. So that is most likely where we'll find massive support if people don't start panic selling, because I'm guessing that most people, when 20K broke, people were really starting to buy, as they knew that this was going to take off and to a new bear market for the cryptocurrency market. And you can see how rapidly this rallied. We basically went from, give or take, 20K to 41K in roughly 3 weeks. So it more than doubled in only 3 weeks. And then it fell towards 30K, and then it took off to roughly 64K before now diving. So we can also look at, if you look at the daily chart for the Fibonacci retracements for this, then we have basically broken. You see it right there. You see the 50 is right there. That is 34K, and that has been broken. The 61.8 is down here. That is at 26K, or roughly at 27K, given it's 27K. And that basically means that we could see a bounce at around 27K. But if this breaks, then a tidal wave is sure for this market down towards the 20K. So dropping for where we are at the moment down to 20K in 1 day or 1 week, that is fairly unrealistic, as we are going to get really overstretched and really oversold, and people will start buying into those oversold conditions. But within the next month or two, then probably yeah. But it kind of depends on whether or not we break below this. If we basically turn around here and head towards the upside, then we can see that we need to break above the 50 moving average. Then we could go to the 200 moving average, which is at the 44K here. And yes, that will probably be massive resistance. If you look at 4-hour charts, we can see how often we came into contact with this area here. 1, 2, 3, 4, 5, and now yet again, 6th time we are basically challenging this area. So yes, it is kind of just a matter of time. We can also look at the 1-hour chart. We have been just getting close to this area here and then just bouncing off it. But 4-hour chart, yet again, you can see that every single time we rally in the 4-hour chart, it is basically the 20 exponential where we're having problems. So getting up towards the 20, breakdown, 20, breakdown, 20, breakdown. And yet again now testing the 20, and it looks like we're just continuing dropping towards this area here and then just going to bounce. So if we were to rally, then we could go up towards 33, and there we'll find massive resistance as well. And we will also run into the 200 moving average in the 4-hour chart. So yes, not looking very good for Bitcoin, and it hasn't been going very well for Bitcoin for a very long time. The hype in this market is completely gone. That is the hype in this market has completely gone, and that was basically what was fueling this market. Also that there are so many cryptocurrencies in the market now, and everybody is talking about the new cryptocurrency, and the focus from Bitcoin has basically been gone for quite some time. It does not get the same headlines as it used to do, and news basically drives the market as well. So let's look at Ethereum. So Ethereum is in a very similar state. We also have a descending triangle here, and we also have a bottom roughly around here. So give or take 1700, that is kind of where the bottom is in this market, around there. So if you look at where we have dropped, where we started, so this is roughly 3,000 down to 1,700. That's $1,300 of move, and that basically means that if we drop below this, and we could see this dropping all the way down to $300. That is basically the measured move here, but that will probably take a much longer time. We have not had the crossing of the 50 moving average and the 200 moving average. You can see the 50 is there, 200 is there. We have the 20 exponential and the 200 crossing, and the 50, that looks like much far off. Probably the end of this month or the beginning of August, we may see a crossing of the 200 and the 50 moving average. But still, the picture is kind of the same. We could rally up towards this point, 2,100, break down towards the 1,700, give or take, and then up and basically break below here. Then we are going to see a massive drop, first of all, to the 1,500 level, which is the 300 moving average at this point, then 1,000, and then much lower. I remember when I started covering Ethereum, it was all the way down here. It was basically talking about the $200 and so on. That's only a year ago. So it isn't that far-fetched that we see this basically drop all the way down back to where we were only 1 year ago. So this has been absolutely parabolical in its momentum, and things don't. If you see a hockey stick like this is just a bubble. I don't mean that this can't go to higher levels, but in 1 year going from roughly $200 all the way up to above $4,000, that is completely bogus. That is completely unrealistic. No asset has that amount of rally in 1 year without basically being a bubble and basically seeing this drop significantly to the downside. So if you look at, for example, Fibonacci retracement, we can see that 50 is here that we broke a long time ago. And then we have the 60 right here, right where we have the bottom line. So we've basically been bouncing off the 61.8 and break below the 61.8. Then that basically means we have a massive tidal wave to the downside. So it looks like it's more far off in this triangle than compared to Bitcoin. But Bitcoin will probably be the one that starts this move if it starts. If you look at MACD, it is very bearish, and the stochastic is also very bearish, and so is the RSI. If you look at the weekly chart for Ethereum, we can see that we have crossed the 20 exponential, heading towards the 50 moving average here, down at 1373. So we should have quite a big bounce when we get towards 1362, I should say. A break below this, then we're talking about the 200 moving average down here at 562. If you look at the MACD for the weekly chart, then the sell-off really started here. So when the MACD crossed the signal line back in basically the end of May, then this really took off. And it's probably going to take a long time before we have a crossing to the upside again. When we had the crossing to the upside, that was basically October last year, and then it continued basically roughly 1 year, and then it crossed again. And at the moment, we are in a long-term decline in this market. Doesn't mean that we'll not see weeks like this where it rallies substantially. It just means that over time, it's more likely that we'll continue going lower and lower. So if you look at the 4-hour chart for this, you can see that every single time we get up towards the 20 exponential, it breaks down. The 20 breaks down, breaks down, breaks down. We did eventually get towards the 50 here in the weekend, and then it broke down. So 20 and 50 in the 4-hour chart have proven to be massive resistant, and it looks like we're just slowly declining back towards the 1750 level, which is crucial for this market at this point. We can see it tested it there, also there, and this will be the 5th time that we'll test it. If we get to that point, break below that, then we'll mostly have a massive drop to the downside. So, hope you find this helpful. You're willing to support our channel by subscribing, hit the like button, the bell button to see our new videos, and good luck, and thank you very much.